Hey, good afternoon, everyone. I hope you guys are all doing well. Welcome once again to another powerful podcast. I am your host, Hector Aguilar of the Aguilar Realty Group here at eXp Realty. Today, we have the pleasure of having Iona Osment Jewett from Hightech Lending with us. Hi, Iona. How are you today?
I'm great. Thank you so much for having me today.
Oh, my pleasure. My pleasure. I'm super excited because today we're going to be spending some time dispelling the top 10 myths revolving reverse mortgages, right? And so, with that in mind, I want to introduce you to Iona Osment Jewett. Iona is a licensed mortgage loan originator. She's been licensed since 1999. She specializes in reverse mortgages and has done so since 2015. She fell in love with reverse mortgages after witnessing the life changing benefits of the product. It's more than just a loan product, as you'll see. It's a financial tool that she's passionate about promoting. Today, in today's day and age, I think there's a lack of education and distribution, and she's committed to solving this problem by providing training and insight to consumers, loan officers, real estate professionals, and financial advisors alike. So, with consumer equity at an all-time high and more retirees struggling in retirement with low Social Security income or low pensions, there's a new generation of the reverse mortgage product that provides a valuable solution, and we're going to spend some time today discussing what those solutions can be. So, Iona, thank you again for making the time to
Of
be with
course.
us today.
Thank
Um,
you.
I think that for the most part, reverse mortgage is a topic that's having that or conversations that we're having more and more as we start seeing retirees and people entering into retirement age struggling financially, specifically with the economy and how our monthly dollars seem to be always short before the end of the month, right? And so I
Yes.
wanted to spend some time with you and talk about reverse mortgage because I have recently helped a couple of my clients reach their financial goals through reverse mortgage. And what better way to bring this topic to light than to spend some time with someone like yourself who has been in the trenches of reverse mortgage since 2015. So thanks for making the time. I really appreciate it.
Yes. Yes.
So let's go ahead and start. First of all, we're going to discuss what is a reverse mortgage known as an HECM. Tell us what a reverse mortgage is.
So it's a federally insured product that allows somebody to access their equity in their home, and they don't have to make a payment on it in any scheduled repayment way. So they can live in the property, and as long as they occupy it and pay their property taxes and their insurance, they don't have to make a monthly mortgage payment on the funds that they borrowed. These can be used to purchase or refinance a home.
Mhm.
And there's a lot of different ways they can receive the funds. They can receive it as a lump sum. They can receive it as a lump sum in a line of credit, or they can even set it up very similarly to an annuity where they're
Okay.
getting a monthly payment. So it's a
Wow.
very flexible product that just allows people to tap into these funds tax free because technically it's a loan. So there's no tax consequence for it either. So it's just a way that people are able to live much more comfortably in their homes as they age.
Fantastic. I think with the advent that most retired peoples are having a hard time with the low amount of income they're receiving, they're what I call is cash poor but equity rich, right?
Absolutely.
And to think
Absolutely.
reasonably that someone who has maybe because let's be honest, I think the average Social Security income that someone is receiving currently right now is about $1,100 is what I estimate, right? And so for someone to live on $1,100 a month here in the US, that's very little. And to want to maybe refinance a paid off property that has a ton of equity probably wouldn't be possible on a traditional mortgage because they wouldn't qualify with that income. Let
Exactly.
alone if they had a payment of $2,000, just say that, how would they make that payment? They wouldn't be able to feed themselves, pay their utilities, their water, their bare necessities. And so, as the baby boomer market is growing, and we know that for the next 10, 15 years, many baby boomers, retirees are going to be going into the same challenge, which is cash poor but equity rich. They don't have an opportunity to tap into that equity and be able to live out the rest of their lives in a very healthy and powerful way. And so I think the reverse mortgage is a wonderful product that allows them to get a little bit of equity, like you mentioned, maybe even kind of take benefit of a monthly or an annual annuity where they can receive a monthly income from the equity of the home on a monthly basis, increasing their monthly income so they can live better, and or buying or refinancing into a property so they don't have a mortgage payment ever again, and they can live in the property for as long as they want to. So I like what the reverse mortgage product provides the consumer. But today we're going to spend some time dispelling some of the myths around reverse mortgage, because let's be honest, when the
Yeah.
reverse mortgage product first came out, it was kind of like Wild Wild West, right? There was so many
Right.
changes, so different. Some people weren't very confident with it. Maybe some people weren't putting the product in the right way, and so there's a little bit of a negative connotation
For
revolving
sure.
reverse mortgage, right?
Absolutely. Yeah. When the product first came out, it wasn't regulated by FHA. So as FHA has taken over the regulation of the product, it has become more and more consumer friendly, and it's very safe now. You can live in the home as long as you live, even if in the event you live long enough that there is no equity left, you would never be forcibly removed from your home. So
Fantastic.
yeah, so that's a big issue. And I don't think back when savings and loans handled it, that was the case. So, I mean, that's really one of the biggest changes. There's so many others, but that's probably the biggest one.
Absolutely. So let's go ahead and dive in. Today, what we're going to do is we're going to spend some time dispelling the top 10 reverse mortgage myths. Let's go ahead and get started with myth number one, which is I cannot get a reverse mortgage even if I have an existing mortgage.
Right, that is completely wrong. In fact, a majority of the reverse mortgages that I see come across my desk are for people who have a mortgage. And so what you do is you're just going to make sure that the first portion of your equity is used to pay off that mortgage that you have.
Mhm.
You'll no longer have a mortgage payment on that mortgage. And then if there are any funds left over, you can either receive those as a lump sum at close or set it up as a line of credit that you can access in the future. That line
Absolutely.
that line of credit grows monthly as well. As when you're not touching it, it grows at 0.5% above the interest rate that you're deferring. So right now
Wow.
that's about 8%. So
Nice.
over time, it's going to not only benefit you that you have it, but it's growing. So it's fantastic.
That's an awesome little feature. I wasn't aware of that particular feature, that you can actually have a growth of 0.5% above your current rate. That's awesome.
Yeah, yeah.
I know that we recently actually helped one of our clients get into, well, she owned her property. She was having a little bit of a challenge making her mortgage payments. She has a low income, and so what we did is we informed her of the reverse mortgage. And what she did is she took benefit of not only a little bit of money up front. I think she had a few $1,000s that she got up front. She was able to re-roof her house, remodel her kitchen, and pay off a couple of debts. And so now she's in the home. She's living comfortably. She had it repainted. It's beautiful. It's in great shape now. And she's also getting, I believe this September, she's getting another lump sum to help her along the way as well. So that was a great little tool. She's absolutely happy. And that's one of the ways that reverse mortgage can be used to help someone similar to her need.
Right. And she would have otherwise had to use credit cards or something
Correct.
to make those repairs. And then
Absolutely.
that would have just been taking away from her monthly, money even more. So it's brilliant. It's just, there's no payment on that. And you set up a line of credit for any kind of repairs that you would need in the future.
Absolutely. And the best part of it is that she has no mortgage payments, and she loves that. And she understands that she's going to make her taxes and her insurance, but
Mhm.
not having a mortgage payment, I think she was in a mortgage payment that was $2,200 a month. And so she was struggling every month, and now she's in a better place. So that's one of the
Yeah,
great features about the reverse mortgage.
I
Let's
love
go ahead
it.
and dive into
Yeah.
myth number two, which is if I take out a reverse mortgage, the lender, not me, but the lender owns my home. What's the real truth about that?
So, just like a regular mortgage, you own it. You have to think of it as a normal mortgage, like a forward mortgage, because even if you were to stop making payments on your forward mortgage, the bank would take it back.
Mm-hmm.
So, the reverse mortgage is you will keep the title in your name,
Correct.
so you could sell or refinance at any time. There's never a prepayment penalty.
Awesome.
We actually really love to keep homes in a trust if there is one that's set up, because we want to make sure that if anything happened to the person who's on the title or in the trust, that we don't have probate or any other issues, and then the heirs can get that property right away without any issue. But yeah, you're absolutely going to retain the title. You can do anything you want with the property. And the bank does not want it, I assure you. They just want to be
Awesome.
paid back at the end of your life.
Yeah, I think a lot of people have that misconception that if they do a reverse mortgage, that the home is no longer theirs. That's just not true. It stays
Right.
in your name. It's in your title, In fact, as you mentioned, having an estate or a living trust is probably the better way to hold title, even if
Yeah.
you don't have a reverse mortgage, right? But
Yeah.
it stays in your name. You can transfer it, you can refinance it, you can will it, you can sell it. All it is just a regular mortgage, right? A lien against the house. It's recorded against the property. It's no different than a normal first mortgage or a home equity line of credit. The bank does not own your property. You still own it. So that's myth number two. The case is the property is still yours.
Exactly. There is one big difference. If you had a normal mortgage or a forward mortgage, if you stopped making your mortgage payments, you would lose that home. So
Very true. Very
that's
true.
the enhancement is that you actually retain ownership and you don't have to make a payment. So
That's the beauty of it. No payments, and you
exactly.
still live in the home.
Hmm.
Let's talk about myth number three, which is there are restrictions on how proceeds can be used. We just mentioned it in an example I shared earlier, but tell us a little bit about that.
So there are no restrictions. You can use the funds for anything at all. You can even use the funds to buy a second home if you wanted to.
Okay.
So as long as you retain the home that the reverse is on as your primary residence, I mean, we wouldn't even object to you using those funds to buy a second.
Now, a primary residence, just so folks know, is
Yeah,
defined as you occupying the property 181 days at very minimum out of every year. So if
exactly.
you're in your home at least 181 days, was just over 6 months, it's considered your primary residence. So
Exactly.
potentially, for example, like we're in Los Angeles. I know there's a lot of retirement communities in Banning, in Beaumont, in the desert, in Palm Springs, right, La Quinta,
Mhm.
that a lot of people might enjoy being out in the desert 2 or 3 months out of the year, 4 months out of the year, and so you would use as an example some of the equity in your home to purchase that nice little condo or on a golf community so that you can enjoy what's called a vacation property or maybe even on the beach. But that's what a primary residence is. It's defined as occupying that property a minimum of 181 days out of the year. So that's not a big challenge to overcome, right?
Not at all. Exactly.
Wonderful. So let's talk about myth number four, right? Myth number four says only low income seniors can get a reverse mortgage. Is that true?
No, it's not. There are no restrictions on your income. In fact, a lot of financial advisors have started seeing the wisdom of the product because of the line of credit growth that's guaranteed. So think about it. You've got a line of credit that's growing at 0.5% above the interest rate, and
Mhm.
this is regardless of market conditions. So even if the real estate market took a dive, your line of credit is insured by the government and will continue to grow. Financial
Wonderful.
advisors can't guarantee that in their portfolios that they're managing for their clients. So as they're hearing about it more and more, they're just like, what is this? This is great. And the other thing is, we'll talk about it later, is there's a withdrawal strategy that financial advisors are using to help people remain even
Fantastic.
more, yeah, wealthy
That's
when
a
they
little bit of
withdraw.
a surprise that I had lined up towards the end because when I talked about it, I was just floored, and it's
Yeah.
a great tool. And so we'll definitely spend some time talking about the growth strategy
Mhm.
behind the reverse mortgage tool. Let's talk
Exactly.
about myth number five. Myth number five, it says, if I outlive my life expectancy, the lender will evict me. We mentioned it briefly earlier, but that's just not true, is it?
It is not true. No, as long as you pay your property taxes and your insurance, you can remain in your home as until you pass away. And if
Correct.
you're married, that right transfers to your spouse. So it's
Fantastic.
right. So
You
no,
know,
absolutely not.
we have a client right now that unfortunately she's suffering from ALS. She's a young lady. She's in her early 60s. She's just about to qualify for a reverse mortgage. She's got probably another couple months before she can hit that qualification age. Um, but she's going to be able to do a reverse because she has a mortgage payment now. She'll do a reverse. She won't have any payments, and when she passes on, her husband will take right to that mortgage and continue living in the property until he passes on. Right, so he'll
Exactly.
be able to live and enjoy his. He's in a retirement community, and he won't have to worry about a mortgage product. So again, another little benefit that most people are probably not aware of.
Right.
So let's talk about myth number six. Myth number six says a reverse mortgage will affect my government bennies, right? We know them as government benefits. Is that
Yes.
true?
No, not at all. I mean, there are some exceptions if you are on SSI, which is like a subsidized income
Mhm.
for people that have restrictions on how much money they can have in their bank account at any given time. That kind of benefit may be at risk, but any other Social Security benefit is entirely risk-free. It's again, it's not considered income because it's a loan.
Correct.
Yeah. So
It's
no.
good to talk about that because a lot of people feel like, oh man, if I get a reverse mortgage, what benefits do I lose? And so I know that there might be a small exception, but the goal of this is to cause you enough maybe questions that you might want to sit down and do a private one-on-one so that we can go over your scenario. Every scenario is going to be different, so you'll be able to understand what the benefits are, and if it applies to you and you can take advantage of it, then do it. Otherwise, just continue educating yourself, and when the time is right, maybe a reverse mortgage will be good for you as well. Let's go ahead and move on. We're going to go on to myth number 7. Myth number 7 says no advisors to help seniors decide if a reverse mortgage is right for them or not. We briefly mentioned it earlier, but tell us about that.
So everybody who wants a reverse mortgage has to complete counseling with a HUD-approved counseling agency that
Okay.
is there as just a neutral party to educate them about the product.
Mm-hmm.
So not only is that not true, it's an actual requirement that they receive the counseling. We can't move forward with the loan. We can't order the appraisal until we have the counseling certificate and proof that they completed it. So
Absolutely,
yes,
absolutely right.
absolutely not true.
You know, both of my clients that we helped recently, just in the last couple of months with their reverse mortgage, had to go through this educational training just so that they understand the product, they understand they're making a right choice. Does it fit them or not? And
Mhm.
I think it's a positive requirement just because it's a third neutral party. It's a HUD approved counselor, right? They have to go through training, and
Mhm.
HUD, for those that don't know, is the Housing and Urban Development Department, right there. That's where FHA lives, or a subsidy of FHA. And so by going through this education, both of my clients were able to fully understand what reverse mortgage product is, and they both agreed. So don't feel like there isn't enough information out there. And if you need more information, we'll be more than happy to provide it. Right? Ultimately, we understand that you're going to live in your property, and it's going to be a tool that's going to benefit you and you alone, without any of our influence, and well educated. So this is a total myth. There's plenty of information and advisors that can help you decipher whether a reverse mortgage is a right tool for you or not. Let's go
Exactly.
on and do myth number 8. Let's go review myth number 8, which is myth number 8 is my kids will be responsible for the repayment of this loan. Tell us a little bit about that. How does that work?
So that is not true at all. This is what's called a non-recourse loan, which is just a fancy way of saying the debt dies with the people who borrowed the funds. So the
Okay.
way it works, your children, if there is money left in the home, it belongs to them. They can either
Okay.
sell it and get that equity, or they can refinance the existing mortgage out of a reverse mortgage into a conforming loan product. So
How much time do
those
they
are
have? How much time do they have from the time they pass on to when if they decide to refinance and keep the property?
So 6 months is guaranteed by HUD.
Okay.
So if they need longer, they would just have to prove to HUD that they're actually in the process of selling the home or refinancing.
Okay.
So yeah, it's six
And they
months
would give it
guaranteed.
they would give another 3 months or another 6 months? How much
Another
longer?
6 months.
Oh,
So
okay.
right,
That's
and then it's just kind of on a case by case. As long as you can prove that you're doing something, you know,
absolutely. Now,
then they're gonna cooperate with you for sure.
absolutely. Now, I know that, look, statistically, we know in the industry that most heirs don't keep the property, but there are a few. There's a small percentage,
Sure.
and the reason why is because the children of the owners of that property have now gone on and created their own families. They probably have their own properties. They probably have children and grandchildren of their own now, and so many of them may not be interested in keeping the property, especially if you have siblings, if you have 2 or 3 brothers and sisters, and they say, hey, guess what? You know what? I don't want to live in the home. I don't have use for the home. I would rather get what's rightfully mine, my percentage. And so 9 times out of 10, maybe 8 times out of 10, they're going to sell the property. And whatever's left over, they're going to divide their equity equally, and they're going to move on to their part of their life, right? So it is rare when someone might want to keep a property, but again, it's good to know that if they do want to keep it, they have 6 months to refinance, and with showing HUD proof that they're doing something, could have another 6 months, right? But again, most families, most heirs tend to sell the properties and divide up their equity. So it gives them enough time to do so,
For
right?
sure. Absolutely.
Awesome. Let's go ahead and move forward with myth number 9. Myth number 9 says reverse mortgage lenders take advantage of seniors. Is that true?
Absolutely not. Again, they have to go through counseling with a HUD approved agency to, so that they completely understand the product.
Mhm.
And there's so much flexibility with the product that nobody's being taken advantage of. You can set it up as a reverse and continue making mortgage payments if you're concerned with losing equity in your home. So it's the ultimate in flexibility and choice. In fact, I would argue that we help seniors every day just by making the right choice of putting a reverse mortgage in place, which I think we're going to talk about in a bit, about just the importance of using it as an estate planning tool.
Yes, I'm glad that you mentioned about their fear of losing equity, right? If
Mhm.
part of what we do as counselors, as advisors, as licensed professionals is that we look at history and we look at the values of properties over time. Now, I remember when my mother bought her property back in the early 80s, she paid I want to say like $83,000. Her home currently, that was in 83, so it's 83, 93, 2003, 2013, 2023. It's over 40 years ago, right? And her home is now worth, I want to say, probably close to $700,000. So in that time frame, her property has multiplied in value. And so I,
Right?
I only I only mention that because people have this fear that they're going to lose equity, or the amount of money that's going to be left to their heirs, and that's just not true, because the value of property, if I remember correctly, doubles every 10 years, typically, right?
Absolutely. And that's usually going to outpace the deferred interest,
Correct.
especially in California. I mean,
Correct.
we just have this crazy growth rate, which we all know. Another thing to think about is even if you continued making mortgage payments,
Mhm.
there's with the fluctuation of value in real estate, there's a chance that you could be upside down even making mortgage payments. So
Yeah, you're
that would be
absolutely right.
even worse, right? It's
Right.
what you're doing with this product is you're making sure that what you would send off to the mortgage is now yours to keep. And then the fluctuation in equity doesn't really matter to you anymore because over
Sure.
time, just as you mentioned, there's such a high rate of appreciation that people end up having equity, even if they keep a reverse mortgage for 20 years. It's
Correct.
the truth of it.
And the truth is that you don't have to take a monthly annuity from your equity if you don't want to. So
No,
it's not gonna dip into the equity on a monthly basis. But if you needed to, and you could use that to live a comfortable lifestyle, then it's a great tool. But it doesn't necessarily mean that you have to use it. So just keep in
absolutely.
mind that you can either have a lump sum up front when you do your reverse mortgage. You can have one lump sum when you do it. You can have a lump sum the next year, or you can choose to do a monthly annuity, or you can choose not to and just not make
Exactly.
any payments, and you're going to be okay also, right?
Exactly. We're not forcing anybody to do anything. We just want to
Correct.
be
And,
there if
and
they do. Yeah,
the most important part of that is to allow you to understand that you have choices. And with those choices, you can decide what's best for you
exactly. And your family,
and
right?
your family. Absolutely. So let's
Okay.
move on to myth number 10. It says, I won't qualify for a reverse mortgage due to my limited income. Is that true?
There are situations where people don't qualify, but it's very rare.
Mhm.
And it's usually because they've resisted the idea of a reverse mortgage and they've used a bunch of credit cards to supplement their income and avoid it. And now we have to, have them afford those credit card payments. And now that the income doesn't pencil out, those are the only times. If you're talking about somebody that has a mortgage payment, and we're eliminating that mortgage payment, they're going to qualify because
Right,
now we only have to have them qualify for taxes and insurance.
right. And,
So
and
that's
typically
that.
the qualification, it's also, and I have to be careful here, but it's not really based on your income, right? It's based more on the equity of your home. Although there are some cases, like she mentioned, like Iona mentioned, that if you have a lot of credit card debt, they're going to have to take those payments into consideration. But guess what? If you have equity, you can do a reverse mortgage and pay off your entire debt and not
Mhm.
have any payments and no credit card debt. either. So if that's the case, you could qualify as well. So even if you feel like you have a limited income, I know you and I mentioned earlier that the average Social Security income in America right now per person is about 1,100, 1,130 a month, right? Not anyone can qualify. Not everyone can qualify for a mortgage with that kind of income. So the reverse mortgage is mainly based on equity, right? Like I said, if you're cash poor, income poor, but you have a ton of equity because you've owned your home 30, 40 years, just like my mom has and has a ton of equity in it, you can still qualify for a reverse mortgage and be able to take benefit of those options that we've mentioned here before, right?
Absolutely. In fact, if you have a bunch of equity, we can let you use that equity as a source of income. So
Right.
do not let your lack of equity intimidate you in any way. We'll make the determination. And again, it's just so rare that somebody doesn't qualify, but I do have to put that out there, right? And again, it's not because of a mortgage, it's because of just all these other debts that have been assumed, right?
Wonderful.
Yeah.
Thanks for clarifying that. Well, we discussed 10 myths, the 10 common myths. I'm sure there's many more questions that we can answer for our consumers and our public. But I just want to remind everyone that a reverse mortgage is basically a home equity conversion mortgage, and it does exactly that. It converts your mortgage to either tangible cash or monthly annuities, or it converts your equity to allow you to pay off your debt or remodel your property. It is a government insured loan, and so with that, there's more regulation, more protections in place for the consumers. And as I found out, it it's not only for those that are 62 and over, and we'll talk about that shortly. But the traditional reverse mortgage is you have to be 62 years and older to at least one of the spouses, right? One of the borrowers
Very
has
good point. Yes, exactly.
at least one. For example, in my case, or in my client's case, I know that she's a little older than her husband. I want to say a year and a half, but she'll be able to qualify at 62 and he'll be 61 or something like that. So
Exactly.
as long as one person is 62, you can
Mhm.
qualify. But here's something new that I learned. If you're not 62, guess what? We have a surprise. Iona shared with me that there's something called a platinum reverse mortgage for persons that are 55 and older and have a value in their property of minimum $450,000. Iona, tell us about that product because I'm intrigued just myself because this is the first time I hear of it.
Okay, so it's just instead of a government insured product, it's a portfolio product, which just means that people, private investors, are funding it, but
Okay.
it allows people who are 55 to take on a reverse mortgage. So the loan to values are going to be a little lower than with the government product, but
Okay.
I have so many of these deals come across my desk right now just because of everybody wanting relief. So
Sure.
yes, now if you're 55, you can reach out and see if it pencils out for you. Yeah.
Awesome. Awesome. That's a great tool because you don't necessarily need to be at 62 years old to qualify, and it gives the people that are maybe 55 years and older. You mentioned something really important, financial relief. And I think there's a lot of families that are feeling that financial pinch right now because of our economy, right?
Mhm.
Because the interest rates are really high,
Yes.
because maybe they're tied into like a 2.5 or 3% rate that they don't really want to maybe cash out some equity and pay off their debt. So here we have a different tool available, a different option to them that will still afford them the benefits of a reverse mortgage. It's not government insured, but I'm sure there's protections in place just as well to make sure that
Absolutely.
you can take advantage of those tools even if you're 55 and older. So that's a great tool.
It's a non-recourse loan, just like the FHA loan. So,
That
which just means that, right, you can never owe more than the property's worth, and you'll never be removed from the property if the home value is upside down.
fantastic. So let's quickly review. What are some of the common reasons why owners should consider using a home equity conversion mortgage known as a reverse mortgage?
This one is a really hot topic for me because I've seen so many people suffer, including my own aunt. So, a really great reason to get a reverse mortgage is if you're retired and you're married and you have two Social Security incomes and you still have a mortgage. What would happen in the event of one of you passing away is overnight you would lose one of those incomes and get a combination of the two. And
Correct.
if you need both of those incomes to make that mortgage payment and eat, overnight that's going away.
Mhm.
So if you were to set up a reverse mortgage now before you need it and continue making the mortgage payments, which you can do, any mortgage payment that you make is added to a line of credit for future use. And what you can do then is inevitably one of you, unfortunately, will probably pass away before the other.
Right.
And at that time, you could turn on the line of credit as a monthly annuity to help you with that loss. And then you could stop making the mortgage payment as well. I mean, there's nothing that would make you have to make the mortgage payment. Maybe you stop making the mortgage payment and now you guys have extra money to live and enjoy yourselves and enjoy each other while you're both still on the planet. So, but I mean, that's an option, but it's an absolute necessity for people that need both of those incomes to survive.
You're
Because the
absolutely right.
reality is overnight, it's going to be gone. And you're going to be dealing with the loss of the love of your life and then feeling this financial strain, which nobody has to do.
And you mentioned financial strain. I was going to mention that financial strain is probably one of the causes of stress, having to worry about, do I have enough money at the end of the month to pay the light, to pay the water, to buy my groceries,
Yes.
plus medical expenses. Let's talk about that. We haven't mentioned it, but as we get older, we need more medical attention, right? Especially if we have illnesses and that require more expenses to be made. So now, when you can, you should take advantage of it. At least educate yourself in what reverse mortgage can do for you financially, for you and your family. So those are some of the reasons why you should at least consider looking into a reverse mortgage. Again, if you have a little bit of income, but you have a ton of equity and you're finding yourself having difficulty, living month to month on the income you have, a reverse mortgage could be excellent for you.
Absolutely.
You mentioned something earlier, and I think we briefly alluded to a little bit earlier. You mentioned a legacy giving. Tell me a little bit about that and the concept behind legacy giving.
So this is for people who they live in a home that's just too big for them. As you age, a second story doesn't make sense, and you want a single story, or just maintaining all of the property doesn't really make sense for you anymore as you age. So what people are doing is they are selling their existing home with a lot of equity, and they're buying something else with a reverse. So let's just say in this case, they've got a home that they're selling that's worth 800. They want to buy something that's 400 instead of putting, so they've got, and then they walk away with 400,000 equity because their mortgage was 400. Instead of putting down all 400,000 to not have a mortgage payment, they can put down 200 and not have a mortgage payment.
Right.
And that other $200,000 is now theirs to do with whatever they want with. They either supplement their own retirement, or in the case of legacy giving, they give that to their children now while they're around to see the joy it brings their kids. So a lot of people are using it to help their kids with a down payment because people can't save money quickly enough in this environment. So they're using that to help their kids get their first house, and then they're living their lives comfortably as well. They don't have to worry about the equity position that they're in with that second home at all. They can enjoy life without any guilt because they've already given the kids their inheritance. So it's called
they've given their kids their inheritance today, where they can enjoy it, and you as a parent can see the joy that you're going to give your children and helping them buy a home. Now, it reminds me of a client that I have here down the street in the city of Covina. Him and his wife are in a property, single story, 3-bedroom, about 1,500 square feet, nice big lot, about 10,000 square feet. And they're getting older, having bad knees, and having to maintain the property has been a little bit tough. So their fear is, if I get a reverse mortgage, how am I going to allow my kids to inherit, my equity or their benefit, right? When I pass away, if I use a reverse mortgage. Well, this allows you the opportunity to buy your next property. For example, my clients in Banning that are in a retirement community have a beautiful home, little 2-bedroom, 2-bath, nice kitchen, small yard. The property is maintained by the HOA, so they don't have any maintenance issues, right?
Perfect.
And they're not going to have a payment because they're going to benefit a reverse mortgage. But now they have all this equity left over. Let's say, in your example, $400,000. And now they can say, hey, son or daughter, I know you want to buy a house and you're struggling to get a down payment. I am willing to gift you X amount of dollars and help you buy your house so you can buy your house now and be able to enjoy that benefit that I'm going to leave you when I pass on, but you enjoy it today. You don't have to wait till I pass away, right? So that's the beauty behind legacy giving.
Yes, exactly.
Right.
And we talked with an accountant who said that you can get a one-time exemption for gifting your kids up to $1 million. So that would also be with no tax consequence to your children.
Wonderful. That's a really, really good tool, really good benefit to discuss as well. I wasn't aware of that. So thank you for sharing with us.
Yes, sure.
sometimes the home equity line of credit, or pardon me, home equity conversion mortgage, or the reverse mortgage, can also be used as an estate planning tool. You mentioned that to me in our conversation. Tell me a little bit more about that.
So I want to touch on financial advisors again, because they've also been selling this product more and more because of the line of credit growth that is tax-free. So a lot of people, even that are mass affluent, which is between $500,000 and $1.2 million in investable assets, can benefit from this product. So not only is it not a product just for people that don't have money, it's a product that people who are mass affluent are taking advantage of. And so what they're doing is, instead of depleting the asset that is being managed by the financial advisor, they're using their home because it's tax-free.
Correct.
When they use it. And then they leave their all of their funds that are being managed in play, so they can continue to make money for them instead of drawing from them, so they're making less and then making them taxable.
Right.
And it's a great estate planning tool.
It's interesting because most of us are always looking for tax strategies, right? And who would have thought that the actual reverse mortgage could be used as an estate planning tool to avoid taxes, right? It's tax free. There's certain limits, and it's also available to the affluent to a certain point, right? And so I think that it's a great opportunity to at least have this conversation with your own personal financial advisor and see if a reverse mortgage could be used to maybe do a nice estate plan for you and your family. So what a great tool. Exactly. I know you mentioned in our conversation a line of credit growth feature. Tell me about that. How does that work? I know you mentioned in our conversation earlier, but I'm still a little unclear.
Okay, so what it is it's guaranteed growth of 0.5% above the interest rate that you're being charged on the money that you take out. So right now that's about 8%.
Okay.
So this line of credit grows and compounds monthly over time without limit. And it's not contingent on the value of your property. So even if your property is, if drawing from your line made your property go upside down, FHA is still going to insure it. In fact, one of the account executives I work with talked about somebody in Texas that he helped out who had been sitting on this line of credit for 10 years, and it doubled. And then he realized that if he took the line of credit out, that he would be upside down, but he was kind of uncertain about what was going to happen in the market, just with politics as they are and the craziness in the world. So he took that money, and now he's got it in a different investment vehicle.
So how is that line of credit funded? Is it funded through the reverse mortgage?
It is. So when you're approved for a reverse mortgage, you would know whether or not you qualify for a line of credit. And then that line of credit would just grow, whatever the balance is, whether it be 10,000 or 180,000. It's going to grow at 8% per month, and the growth is guaranteed. So that's the way it works.
And that's funded from the equity that's coming out. Would it be funded from the annuity if you choose that route, if you qualify?
So it's just the equity so when you take out a reverse mortgage, you qualify for it based on your age. The older you are, the more you qualify for. And so let's just say somebody qualified for a $400,000 reverse mortgage. That was what they qualified for. And they had a mortgage of $100,000. Well, if they wanted to, they could just put all the difference, that $300,000, in a line of credit and then just let it grow.
I see.
Yeah. And then eventually, if they wanted, they could convert that line of credit into an annuity feature, and they wouldn't have to refinance. They would just call the servicer and say, I'd like to turn on the annuity feature now.
That's awesome. What an incredible feature.
Flexible. It's so incredibly flexible.
That is awesome. Now, I know that you mentioned something called a coordinated withdrawal strategy. Does that work in conjunction with the credit growth feature?
Yes, and the line of credit. So what this is a coordinated withdrawal strategy is something that that financial advisors have learned about. And it's really just based on people, as I mentioned before, who are mass affluent, who have a certain amount of money to invest monthly. And all it is the financial advisor is telling the client they need to set up a line of credit and not draw on it. Just let it sit there and grow. So let's just say it's a $300,000 line and they're letting it grow. And what happens, that person has other assets that they're withdrawing from, okay? And in a down year for those assets, instead of drawing from the asset, they're drawing from the line of credit. And so this simulation model was done again and again and again. And on average, just based on market forecasting and what has happened in the past, if somebody took out from the line of credit instead of their investment portfolio in the down times, which on average was like three different times, they ended up with 700% more when they passed away for their estate.
Oh, wow.
And that's just because it wasn't a one-time flip. I mean, again and again and again. And it's because you're not, when the asset is already deflated, instead of hitting it again, you're leaving it in play. So it has a chance to recover. And then you're taking from that line of credit instead.
Awesome.
So, yeah.
Oh, what an incredible tool. I'm so excited about the benefits and choices that, older folks can have, and maybe using some of that equity to, have a better lifestyle and establish a financial retirement. Because let's be honest, retirement for those that are hitting baby boomer years that haven't done so much in terms of investments, this could be used to establish a little bit of retirement and protect against maybe the loss of equity. And it's guaranteed by your home, right? You don't have to make payments on it. It can be funded by the equity in your property, and you can have a much better financial life than having to struggle month to month and having to worry about your retirement age, your medical needs as you grow older, and also giving some of your legacy to your loved ones today. That's an awesome feature as well. So, man, I've learned so much today, Iona, really, and about the reverse mortgage. And I'm excited about maybe bringing additional educational updates to our consumers and to the public, because I think the reverse mortgage has a place in our market, and it's a wonderful financial tool that's going to help more and more people. And the only way that we can overcome some of the resistance around reverse mortgage is through education. So I know I appreciate it. I know my consumers and my fans appreciate it. And I really thank you for, just giving us so much wealth of information around the reverse mortgage. I'm really, really glad that we had this conversation.
So am I. Thank you so much for your time today. And I welcome any opportunity to talk about this product.
And I look forward to being in touch with you more and more often. Well, that's our podcast for today, everyone. A reverse mortgage product is a wonderful tool. I know it's probably a lot to digest in a 45-minute video or conversation about it. If you or your loved ones have questions about a reverse mortgage and want to find out if that's a perfect tool for you or your family to use, please reach out to us. You can call me directly. You can send me a DM. In fact, send me a DM that says reverse, and I'll know to put you on a calendar where you and I can sit together along with Iona and our loan officer partner to see if the reverse mortgage is good for you. Again, don't be afraid. It's just sitting down and discovering if a reverse is good for you. Get some questions answered and decide whether this tool can help you financially for today and moving forward. So once again, I'm Hector Aguilar of eXp Realty, Iona with Hightech Lending. Thank you so much for spending some time with us, and we look forward to more of your reverse questions. Thanks, Iona.
Thank you. Bye.
Look forward to talking to you again. Take care, everyone.